afternoon, everybody. Welcome to TraderMerlin Show. It is your Monday edition. Back in the saddle. Sorry for the 2 days off on Thursday and Fridays. I was traveling to the great state of Texas. Had a fantastic time. I got to talk cryptocurrencies and digital assets for a 3-day class down there. Had some amazing students. So those of you who are joining us today that were in that class, thank you very much. I'm much more casual today. I get to wear my San Francisco 49ers shirt in hopes that we get to win. Let's hoping it's going to be a good game tonight. We need to win this one badly, make us to the playoffs, but it should be a good day. All right. As I was gone, of course, we saw a lot of wild market action. Typically happens when I leave. So when I'm away, we know that there's going to be big market moves. And, of course, this is a short week as well because Thursday and Friday, let's see, how do I block Dan Hills? He's a Panther fan. I'm going to block that guy. Just kidding, Dan. Just kidding. Good luck to you tonight. You know, when, by the way, as I was just going to say, Thursday and Friday, obviously Thursday's Thanksgiving, so we'll just do shows Monday, Tuesday, Wednesday this week, and I'm not going to do one on Friday because it's a half day, and I will probably go do something fun, or try to anyway. Get back out there and be more social and have some fun. So let's talk about this picture right here. I didn't want to do anything overly graphic because I know this term is something that might have people a little bit like, oh no, I don't want to have a graphic of a dead cat bounce. And it was a question that came through, was asking me if this is a dead cat bounce and what do I think about this rally. I guess I'm going to pose it from two different perspectives. We'll look at it from the rally perspective and we'll look at it from the dead cat bounce perspective. And for those who don't know what a dead cat bounce is, I will explain it. Don't worry, it's nothing graphic. It's just a term the industry uses. I have no idea why they decided to use this. So let's look at it from the first perspective. We've had this really aggressive sell-off in the equity markets, right? Pretty nice, not really aggressive. Let me take that back. We've had a sharp decline over the past couple of weeks in the equity markets, as you guys can see here. This is the S&P 500, and I will modify this a little bit to get you to the peak here, which was on October 27th, down to the lows we achieved on Friday, which is down 5.66% in 19 trading sessions. That's not very good, right? Unless you're short the markets. We did come right back down to this 6,500 level or 6,540 level, which I think is very important. We did not close below 6,540, which for me is a kind of the line in the sand there for this current uptrend that we are in. So all in all, it was a pretty big pullback, but right back down to those pivot lows and then bouncing off of it. So from a rally perspective, we can make the argument that this is where we should have gone anyway. When you're looking at something in an uptrend, typically you're looking for it to come back and pull into the most recent big demand zone. You know, that may have been somewhere a little bit earlier, but breaking this low as I've had on the screen here at 6,540 on the S&P 500, that one becomes very critical, really important to me. I know everybody looks at different things, but this is important to me. So I definitely expected there to be a bounce at that level. Again, if we closed below it, you can see Friday's candle, we did go below 6,540 on the S&P. If we had closed below that, my perspective may have changed a little and I would feel much more bearish, but the fact that it held, markets moved to the upside, definitely feels like this could be rally material. Now the question becomes, based off of the last 2 days, I'm talking Friday and Monday here for the S&P, is this rally strong enough to get us to the next kind of big pivot area? And there's a bunch of them. I know that technical analysis is one of those things where it's very subjective. It's very in the eye of the beholder type of thing. We could look at this zone right here, which I'm going to draw a bunch of yellow boxes on your screen just to torture everybody here. And we even have box on top of a box. And this one should actually be moved up to there. You have these big 3 yellow zones, right? All 3 of these zones are potential points where it's going to have to get through. If it does in fact have the strength and we do find ourselves in that rally mode with a big question mark there, well, yeah, this certainly is going to have to get above these most recent pivots because we've, this isn't really a drawn correctly downtrend line here, but things not looking so great because we are technically making some lower lows and lower highs since this October peak. So we can make the argument that the rally is there and that we're going to see this thing continue to move to all-time highs. Big question is how, right? If we're going to talk about all-time highs for this market, how are we going to get there? When we have NVIDIA, which posted great earnings last week and raised their forecast for the markets going forward, they didn't do so well. You can see we had a pretty big gap up, came right back down to that same line, right around 176.76. Today we bounced off that again. Had a nice rally, it was up 2.05%, so kind of mid-pack for our Magnificent 7 here. But NVIDIA is, again, the fulcrum of the entire financial market. So if that thing continues to show weakness, then I think all of tech is going to show some weakness as well. Now, we had a couple other big ones here that were leading that surge to the upside. Tesla's 6.82% jump today. It's funny, that candle doesn't look like much at all. It just looks like a decent sized green candle, but 6.82% jump in Tesla technically doesn't really tell us much, right? We're still kind of in this weird little sideways chop that we've been in for about 2 to 3 weeks. Well, about a week and a half, let me say that. Google, though, on the other hand, is just going for it. We had a bearish Harami formation, which should have led to a down day today based off what we saw. For those who don't know what a bearish Harami is, it is these two candles on the right side of your screen. So based off of that nice little uptrend there, this would have forecasted downside movement in Google or Alphabet. I'm going to continue to call this Google forever, right? Big Eb says Google's going to break that 4 trillion threshold soon. It would appear so. I mean, for right now, when you look at the Magnificent Seven, this thing seems absolutely unstoppable, which is a slap in my face because some of the stuff that was happening earlier this year looked very bearish on Google. Peasant Ambition says, short it. If you want to blow your account, go ahead. Go ahead. I don't think you want to short. I don't think you want to be short in Google right now. This thing looks just absolutely fantastic. Now, could you, Peasant? Absolutely. You know that this is going to come down at some point, but I would not get in the face of this thing at this moment in time. So Tesla, Google leading a huge charge today for the NASDAQ. You had Meta as well, but Meta coming off a much, much deeper sell-off here. And I still don't think Meta looks that great. Right now we're looking in the after-hour session. Meta sitting at $614.45. But notice the origin of this last little aggressive sell-off, right? That was right around $629.50. It's my feeling that we'll see Meta rally up, but I think you'll probably see it stall out at $629.50 based off that big impulse candle down on November 12th. So picture still not looking great for Meta. Amazon. I guess I could update you guys on the trade that I'm in on Amazon. Let's go back to this one here. I was exercised over the weekend. Obviously, I had sold puts at the 222.50 mark. You guys might remember that. That was last week expiration. We got filled. And then this is where we are currently on my Amazon position. So I'm currently long 1,500 shares of Amazon. If you take the premium I collected last week, which was $1.41, I believe, and then you add in the premium I collected on the most recent options because I sold covered calls on this bad boy, my cost basis is $220.64. The other side of this is those are the options I sold against it. So I'll bring up Amazon here in just a second. I sold the 235 calls expiring this weekend, this Friday, for 46 cents. Really not about the money. I wasn't really trying to get a lot of premium, just getting something. I was anticipating a rally here in Amazon. I think we'll probably see that have a nice little rally to the upside here. And you can see, let me put the 235s on here just so we can see where we're at. Go to coordinates and put my 235. Bam. Okay, there we go. So 235 is where I had my calls. I was going to sell a bit lower, maybe like the 233s, 230s, somewhere in there, but I really don't want to get rid of my Amazon. I think we'll see Amazon have a bit of a rally here. Of course, I'm biased because I think Amazon's the greatest company on the planet. I know, you guys are all saying NVIDIA. To me, Amazon is everywhere you want to be. Or maybe that's Visa. We got copyright infringement on that trademark. Anyway, that's where we are right now. Currently, Amazon is sitting at 226.51. So keep on rallying here, and hopefully those 1,500 shares will turn into something much, 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 much better and erase some of those losses I have from MicroStrategy, which really crushed me. On that list, talking about things where they're moving, I know, Big Eb. I know it was less than 2 weeks ago we were there, and I think we'll get there. I do think we'll get there. And honestly, Big Eb, if we get to 235 by Friday, I'll buy those calls back. Just because I think you'll see Amazon rally up more here. We're going to the holiday season, man. We're going to the holiday season. I mean, Amazon just had their Black Friday pre-sale, which I didn't buy anything. I should get a Medal of Honor for that one right there. Ma America says Amazon Santa Claus rally coming soon. Maybe. I'm writing an article right now for the December newsletter for Trading Academy that deals with the Santa Claus rally, what it is, the math, the numbers, all the stats behind it. You guys keep in mind the last 2 years, the Santa Claus rally has not come to fruition. Last year, we were down 0.04%. The year before that, we were down 0.48%. Average for the Santa Claus rally window, which is 7 days, is 1.31% going back in the 1950s. And we haven't gotten there. So we'll see how it all pans out this year. There are a lot more headwinds, but these markets have taken a pretty big dive. Some of the big name companies are going to get a little bit of buying pressure. For example, Amazon And Amazon dropped 16, almost 17% off of its peak back in early November. That's pretty good. Because the podcasters can't read the chat that goes on my YouTube channel live, I got to give a shout out to John. This is good. He goes, I vote we rename it to Amazon in honor of all my wife's purchases. I love it. Or Merlin's on. I mean, I swear. Sometimes, if you're just feeling depressed, you just buy something on Amazon because then you come home and you got a package on your front porch. Like, oh, somebody cares about me. It's you that bought it for yourself. Yeah, I'm definitely excited about the Amazon season. I think they'll do rather well. And so Rob says, still below supply zone, above that top, low on the curve. Yeah, I mean, if you look at what Amazon has done since June, 210 is the floor. And so I'm a little bit high on that one because my puts were sold at 225.5, and that's just really because of the origin of this move. October 30th, we had that aggressive sell-off, and then it gapped up the next day because of its earnings announcement. Well, that was my target. I was using that as the floor there. Now, we definitely tiptoed below that, which I didn't think we would do. And I told you guys I would be okay holding it, and I ended up keeping my Amazon. Now it looks good, but who knows what the next few days will hold. There's nothing on the earnings front that is like a monster earnings shock potential. No Amazon, no Microsoft, Intel, not that big of a deal, but no Googles, no Apple, no Meta reporting this week, so I'll be safer there. I dumped my core rev. I took a loss on that one. I just couldn't. I was just like, nope, I didn't want to go into the weekend on it. Dallas, it was free fall. It was in a pretty aggressive sell-off. I didn't even see CRWV. Yeah, well, I definitely did okay when I got out because I sold in the morning of Thursday as I was getting ready to go get on my flight to Dallas, but I took a decent loss on that one. 85 was my strike price I was put. I did collect some premium on this bad boy, but still lost a few grand on this one. So not that happy about that, but it's okay. I can't win them all. This was definitely a loser for me. And I think I had FISV. That wasn't on this account. I dumped my FISV as well. It's just because that trend is just not doing it. All right. Tomorrow morning, government numbers. Yes, Dakota, there are quite a few. We'll talk about that in just a minute when we get there. I want to go back to this discussion. Yeah, Big Eb says, I'll get the next one. Yeah, it's fine. There was I had a fantastic group of students in Texas, and there was a lady in class. I won't mention names because I don't want to hurt feelings or anything like that. And I feel really bad. So the class I had was a 2-day class on cryptocurrencies and digital assets. And as you guys know, I'm going to try everything I can to be as brutally blunt and honest about what it takes to be successful at this. I'm not going to tell you what you want to hear. There's no point in me telling you what you want to hear. It's more important about telling you what you need to hear. And this lady had some... This lady had some issues, and I think all of us here would be able to help her out because most of you are fairly experienced at this. And her problem was she was explaining how she was losing money, and she's trading futures. And she's like, oh, I'm losing money. So, of course, I'm going to ask. I want to know, what are you doing? And I said, are you trading too big a share size or contract size? No. Are you sticking to stop losses? No. Done. I mean, this is the simplest, easiest thing to do. But it comes down to not wanting to lose, and this individual did not have a lot of money. So as you guys know, when you're trading with scared money that you're like, I cannot lose this, you're bound to lose it, right? Your odds of failure increase significantly when you put that pressure on yourself and say, I have to make money with this or else, right? I'm in trouble. And no one should be trading with money that takes food off their table. It should always be money that if you lose it, it's not the end of the world for you. So I played a bit of tough love on this lady, and she's like, look, you got to knock it off. You got to use those stop losses. And I move them. I was like, well, that's the problem. You can move your targets. That's great, but you never move your stop loss. And I felt really bad because it was a 3-day class, and on the third day, she didn't come back. And I felt like, oh, man, I didn't mean to. I don't want to scare anyone away, but fortunately, someone had told me that there was another issue that she had to attend to, so I didn't feel too bad. But with that core weave, Big Eb, the numbers just didn't look good. The trend was looking really bad. I didn't feel it, and I just decided to dump that one. And the irony is right now, Big Eb, it'll probably have a huge rally just to laugh at me, but I don't care, right? I just don't care. I'll move on to the next trade. like Taylor Swift and one of her many ex-boyfriends. Just shake it off. Shake it off. All right, so I'm not a bully. I'm not a bully. Okay, so the first part of this was talking about are we in that rally mode? And we could certainly make that argument, right? You could certainly make that argument because big picture, we still are in a big uptrend. Whether you look at it from the April lows or we put this out onto the weekly, here's your weekly. You know, this still looks like it's on a big uptrend. So all in all, you could make this big argument, especially now. Well, it's only one day into the week, but you have a bullish Harami pattern forming on the weekly candle. Of course, it's Monday. Let's wait till Friday till we get that close. But bigger picture, this certainly does say it's a rally. So the argument or question here is it a rally? Part of me would say, sure, yeah. The other side says, is this a dead cat bounce? Now, how many of you know just a simple yes or no what a dead cat bounce is? Do you know what a dead cat bounce is? Yes or no in the chat. If it's all yeses, I won't explain it. If I get some no's, I will explain it. Essentially, I know we got a bunch of most know it. So a dead cat bounce is simply usually a sharp move in the opposite direction of the way that things have been going. Wow, look out. Finally got some good interaction here. Wow, I love it. I love it. Beansita, welcome. I see a lot of new names in here. I must have triggered something. So for those of you who are new, hit that subscribe button. Always helps out. And as the show progresses, if you actually like the show, hit that thumbs up button because I'm sure Chio will probably tell everybody to put their thumbs up. All right, let's go to the current daily time frame on the S&P 500. As we can see, the way that this has been moving down, it's been pretty sharp, right? Now, we did come back down into what I would say is a demand zone, as I mentioned over and over again, at 6,540 on the S&P 500. We hesitated there, and because we didn't close below this, again, this to me is all psychology. If the markets had closed, or if the S&P had closed below 65.40, I believe a lot of institutional interest would have been to sell, to liquidate, to start offloading their positions, and that would have precipitated a bigger sell-off. For whatever reason, it closed back above 65.40 and ended with a nice big green candle. Because we bounced at that demand zone, and we've been in a really aggressive sell-off where the market had gone down quite a bit of a percentage, this bounce was somewhat predictable based off what we saw on Friday. The big question is, does it continue? And I guess it boils down to what you're putting more emphasis on. If you're putting more emphasis on the most recent price action, then this is just a dead cat bounce. When I say most recent price action, I'm talking about since late October. And if that is, in fact, the case, then these yellow boxes are where we're headed. If it gets above this first yellow box, which I know is a very large box, it's I've got this drawn between 6,755 and 6,801. If it gets above that, then, okay, we're back into rally mode. But I get this feeling that it's going to probably go up in that first yellow box we see, the closest to price one, stall, and then come back down. So as Exclusive Quality puts, thank you for the literal definition. He says, a dead cat bounce is a term used in finance and stock market analysis to describe a temporary, short-lived recovery in the price of a stock, index, or asset that has been in a prolonged decline. Now, the only thing that doesn't fit here in that definition is a prolonged decline. As you guys can see here, this isn't prolonged, right? This is just a couple of weeks, well, a few weeks, from October 29th to November 5th, right? So we've got a month. All right, fine. I wouldn't call that prolonged. But now we get that nice little bounce up. You know, I honestly, when we have this discussion of is it a dead cat bounce or is it a rally, I could make you arguments for each one. It could be retail week, and it is, Andy. We do have a lot of retailers reporting earnings today. I'll talk about that here in just a minute. But yeah, this you could make arguments for this either way. It feels to me, if you're a short-term trader, I'd call this a dead cat bounce. I'm looking for this area right around 6,800. Yeah, Steve says, I think we get above that 6,800 area, and that's probably hit all-time highs by the end of the year. I would agree with you. And he says, if we can't clear 6,800 this week, I think it will break 60. I agree with you on both of those. And Steve, isn't that really the question at hand? Which is this a rally or a dead cat bounce? I think if we get above 6,800, it's a rally. If we can't get above that, then this is a dead cat bounce and we're coming back down towards lows. I mean, a lot of this stuff is after the fact. Certainly, we've got a ton of housing data this week, Luis. He says housing data will let us know. It's not the sole driver, but housing data is is certainly going to be a factor this week, and we'll talk about that when I look at some of the economic data here in a minute. So for the gentleman who sent in the question about is a dead cat bounce or a rally, I got arguments for both ways, right? And for me, it's just this. I'm going to take the other two yellow boxes off. That one yellow box on your screen is the important one. That's the one we really got to pay attention to going over the next couple days. My guess is we'll probably rally up into that, which is great. I'm looking forward to it. Let's get a little bit more rally. I'd like to see Amazon continue to rally. Love to see Amazon close Friday at $334.99. Other than that, no other big positions on for me right now as we speak. Dan says, why too big swing in FedWatch? I know. That is a wild one. Andre says, a cat's got 9 lives. This market feels like it's got 1,000 lives sometimes. Yeah, great question, Dan. And I don't know the answer to that one, right? We had last week, it was down to 30%. A week ago, we had like a 30% chance of a rate cut. Now we're back to 82.9. I'm not exactly sure why that is. I have not wavered in this. I still believe we're going to get a rate cut. I just think that the ball is rolling, and I think that they're going to continue to keep on going, at least through the end of the year. Waller wants a cut. Did he change? Well, let me see my list here, because I think Waller was on the fence, right? Let's go to my list, and Waller was supportive. So this isn't, this isn't, 100% definitive, but I was looking at kind of the voting members for the FOMC rates. We put this one up a while back, and Waller wants a rate cut. Most of them do. The only ones who are opposed right now are Schmidt and Collins. They're definitely opposed. Powell and Williams are uncertain. They said they're data dependent. And everybody else is supportive. And, of course, Miran off his rocker, he wants, 6,000 basis point cut. He wants us to negative $18. He's wild. But, no, he wants much, 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 much lower. And then I get the haters come through. And you know what's going to happen. Mike says, sorry to inform you, Merlin, but the Panthers will be clawing their way to the top over the 49ers tonight. I'll bet a classic QB on it. Done. Book it. The odds of you being right are great because our defense is stinkier than Swiss cheese. I mean, our defense has so many holes in it from all the injuries we have, so you can run all over us. Have I heard of the crypto company Coin Depot? I have heard of the name, but I don't know much about it, Mickey. Let me look into that one. I was talking to these students in Texas this week, and one of the things you got to be super careful about is new names. Names that you don't know of, names that aren't familiar. Be really careful. And before you put one penny in there, Mickey, do a deep dive. Go to 15 different review sites. Go to Reddit. Just search for good and bad comments, mainly bad comments about them. Because I have talked to many students who have gone to exchanges or crypto companies that I'd never heard of, and all of a sudden they lose all their crypto and all their money. So you'll be very surprised. Been around since 2021. 2021 is not a long time, man. 2020 is not a long time. All right, let's see. What do we got here? I had some other stuff. So I went through the Amazon trade. I showed you that one. Let me go and check out this right here. So this question came in from Marcus. Marcus says, thoughts on MSCI delisting Bitcoin companies? Will this push Bitcoin much lower? This is really interesting. Really interesting. I don't know if you guys heard about this one. I was reading about this pretty much my entire plane ride home because I wanted to dig into it and really understand what was going on. But MSCI is Morgan Stanley, basically has these indexes that represent different international markets. Let's just call it basically the benchmark for international indexes is run by Morgan Stanley. And Morgan Stanley is mulling the idea, they haven't done it yet, mulling the idea of removing companies from all MSCI indexes if they have more than 50% of their assets in crypto. Of course, Strategy has, I would probably say 95 or 99% of all their assets are in Bitcoin. And what that means is if they do make this change where anything listed in an MSCI index cannot have more than 50% of their assets held in crypto, they will all be delisted. What that means is anyone who's tracking an MSCI index will be forced to sell, liquidate automatically those positions. Now, when you look at what's been going on with MicroStrategy, which has just been an absolute meltdown, thank goodness I got out when I did, we are now down at 179. Getting out long time ago at 315 sounds like a great deal, and that's over $100 ago. at some point this might become a buy, but the problem is I think people are selling off this MicroStrategy position with the expectation that that MSCI or Morgan Stanley is going to make these changes in the first part of next year. That could happen in January or February. So Marcus, if that does, then yeah, I do think this will have much more pressure down for for crypto markets, but more importantly for MicroStrategy, because it's going to be delisted. It's going to, you're right, these indexes, not delisted, let me say that back, sorry, not delisted, it is going to be removed from the indexes, and therefore they will have to sell. It's kind of like when the S&P does rebalancing and they add a new stock to their index, they get rid of something else, and typically the one they get rid of tanks. This MSCI represents, it has about 85% of all the equities in the stock market are represented at MSCI. So getting rid of MicroStrategy, that would probably also get rid of things like BMNR and pretty much anything that's a treasury. So all of these ones I have listed on my treasury list over here. Let's get rid of that, show you the treasury list. All of these could be facing some serious downside move here soon if Morgan Stanley does decide to implement this rule, which says 50% of assets or more in crypto, you will now be removed from the index. And from my reading of this, there's $9 billion worth of MicroStrategy are in these funds. And what that ultimately means is $9 billion worth of MicroStrategy will be sold by these funds because they're not allowed to keep it. And that is probably why we're seeing such big downside move. In the terms of catching a falling knife here, I'd be very careful on buying MicroStrategy because I just feel like there's more downside pressure here. It feels like there's something pushing this down much, much harder than just Bitcoin itself. Now, the other side of the story is that Bitcoin, which had a great rally over the past few days, thank goodness, nice, beautiful rally up there. I was reading today, and again, I don't know, these sources are very difficult to come by, like which one's the most accurate. But I'm going to put on this screen here. Let me just take this red line down to there. The number I read last night was 74,433 is the liquidation price for, or not the liquidation, the average cost basis for Strategy's Bitcoin position. And notice right where that lines up. I think that's awesome. Not that 74,443 is literally the zone that I drew on here, which says we will never hit this level again. For MicroStrategy's sake, I hope that that's true. Because if we do break down below the 74,000 level, Strategy's in deep doo-doo, right? And we look at the price chart of Bitcoin here. Bitcoin from that peak that we had on October 6th to our dead low we achieved on November 21st, Bitcoin certainly has had a dump of 36%, but that's nothing compared to MicroStrategy and its sell-off, which began a bit earlier in July 16th. It's down 63%. So almost double. Shoulda, coulda, shoulda, but. Big M says, are stablecoins hurting Bitcoin? No. I don't think stablecoins are hurting Bitcoin at all. I don't think none of this has anything to do with stablecoins. Stablecoins are just going to be that simple payment network that allows businesses to have their own currency. Again, you'll probably have an X buck, an Amazon buck, and all those, but that's not going to happen until August of next year. There's a lot of other pieces to this, I think, that are interesting. And when we look at stablecoin, it's kind of a trick question, Big Ab, and let me peel back the layers of this onion to explain it. He says, are stablecoins hurting Bitcoin? No, but if you look at a stablecoin like Tether, let me see if I can bring this up for you guys right now. Tether Holdings. All right, so let's go and see if I can find what Tether actually holds. Let's go here to images. Tether Holdings. No, it's not going to show us. Maybe here. Traders Union. How old is this? When was this article written? April. So in April, this is their breakdown. And Big Eb, I think I'm hoping that you know where I'm going with this. So according to the Genius Act, a stablecoin can only have three things. Number one, treasuries under 93-day maturities. Fine. Number two, cash held at registered U.S. banks. And number three, they participate in the repo market. Tether has all three of those. However, you notice here in the crypto side of things, they own 91 Bitcoin. which is, sorry, 91,000 Bitcoin. That's $7 billion. In order to comply with U.S. regulations, which will be implemented and imposed in August of 2026, Tether will be forced to sell $7.5 billion worth of Bitcoin. Just keep that in mind. Now, they have all sorts of other markets here. These are all cash and other gold pieces. But Tether also has billions of dollars worth of gold, billions of dollars worth of corporate bonds. All of that stuff will need to be sold to comply with U.S. rules. So while I don't believe that stablecoins are hurting Bitcoin, the fact that stablecoins like Tether will be forced to sell their Bitcoin could have a negative impact on the price of Bitcoin. So I know it's a tough way for me to answer that one, Big Ed, because I don't think that it actually is hurting Bitcoin. But if they sell all of this stuff, then you're going to start to see more downside movement in the price of Bitcoin. So Tether has a lot of things that they should not be holding, corporate debt being one of the big ones. All right, let's see. Should have, could have done. What's your take on the 4-year Bitcoin cycle? Well, Andres, it feels like it's coming to fruition, doesn't it? I mean, if we look at that 4-year cycle, which is supposed to end in November, well, it just started in October. It started 1 month early. So far, not looking so good. You know, I thought this time would be different, and here I am holding it again through my second 4-year cycle where I know about the 4-year cycle, and we'll see. I do believe this time is different because of the government regulation, because of the president and all the powers that be all investing in Bitcoin themselves. They want to make some money, so I think they'll stop it. Because the Bitcoin would then be primarily a store of value. Correct. That's what it should be, right? Bitcoin should be digital gold. And ultimately, I think that that's what will happen is Bitcoin will be digital gold. Now, for those that keep thinking that Bitcoin is going to be a payment network, like, you know, you go buy your Starbucks and McDonald's with it, no. What you will use is a layer 2 network, like Lightning Network or Strike, right? These networks are built on top of Bitcoin. They make it much faster, and you could theoretically use those for transactions, or AMP as well as another one. Let's see. Liz says, I'm hearing potential rumors that a crypto exchange got liquidated by the 1010 crypto creator. Thoughts? I don't know. It wouldn't surprise me at all. When you have moves like that, it liquidates people. The question is, which big exchange? I don't think it's Kraken. I don't think it's Coinbase, so I'm not too worried. If it's Binance.us, who cares? They're insignificant. That exchange barely does anything. Binance.com does a lot more. They're way bigger. What is he? Tom Lee just said ETH bottom is in, and he's targeting 7,000 first quarter. Wishful thinking. So Tom Lee is to Ethereum what Michael Saylor is to Bitcoin. Can you imagine if Michael Saylor came out?
Well, I think the Bitcoin shouldn't be used. It should not be used. I personally think Bitcoin's garbage. It's trash. You should all just get rid of your Bitcoin holdings. It's just not good for you to hold Bitcoin, right?
There's no way he would say that because he's got $40+ billion worth of it. So it doesn't matter what happens to Bitcoin, what news comes out. He's always like,
Bitcoin's the greatest thing ever. It's just really just an energy token, and it really represents true money. It's like buying Manhattan in the 1800s. It's going to go up in time. It's going to go up in value. So you're an idiot if you don't own Bitcoin.
That's him. Tom Lee is the exact same thing, but for Ethereum. Remember, Michael Saylor. Sorry, and I have not practiced my. I have not practiced my Michael Saylor impression, but that was just off the cuff. I might have to work on that one. But if you look at these treasuries, here you've got MicroStrategy. Obviously, Michael Saylor has lost tens of billions. I mean, ridiculous how much he's lost. Oh, my goodness. The market cap of MicroStrategy, and this is just that last rally, that last sell-off. Really from July 16th to the low he achieved just a couple days ago. That's a 63% reduction in price, but that's not even the all-time high. We can go back here. We are now 69% off its all-time high, which is from back in November of 2024. But look at BMNR, right? So this is Tom Lee's fund. And Tom Lee is doing the exact same thing as Michael Saylor, just doing it with Ethereum. So 62% slide from those highs. Now, if I go look at Ethereum, which is what this is supposed to be based off of, it's built off of it, it's just literally an Ethereum fund, how much has Ethereum dropped in that window of time? If we go to this, a little bit off there, if we go to the all-time high here for Ethereum, or at least the high of this most recent rally from August to where we bottomed out at just a couple days ago, Ethereum is down 47%. So these ETFs or ETFs, these treasuries doing much worse, doing much, much worse. So yeah, Tom Lee's of course going to say the bottom is in. And let's be fair. Let's forget that Tom Lee's a cheerleader. Let's forget that all he wants to do is see Ethereum go up. How many of you would say that he is correct? Look at the price chart. Right, I've got several different zones drawn on this, and I'll take down this little line here. You know, I had this area of consolidation because of this big rally up that we saw on July 7th, 8th, 9th, 10th, a big rally up before it consolidated again. I had drawn out this little yellow zone, and I do think that that yellow zone between 2,475 and 2,592, that's your next decent demand zone. And our tail that we achieved on Friday, November 21st, came very close to it. So he may be right, but whenever you hear someone like a Tom Lee or a Michael Saylor or Ackman say the bottom is in or the top is in, just look at the price charts. I actually would agree with Tom Lee that at least for the short term, the bottom is in for Ethereum. And there's another big piece that I want to make sure of. I'll say it now, but I really want to check my facts on this one. I had heard that the SEC has given them permission to now stake their holdings. I can't emphasize how important that is for Ethereum. For those who don't understand what staking is, it is where you take your coins, in this case Ethereum, and you take them out of circulation. They're no longer part of the buying and selling pool of liquidity, and you lock them into the protocol. You lock them into Ethereum, which means no one can buy them, no one can sell them. They're stuck in the system. You've removed them from the pool. The more that happens, the less circulating supply is. And as you guys know, if you reduce circulating supply and demand stays the same, prices go up. Now, right now, Tom Lee and BMNR are trying to get 5% of the total supply of Ethereum, which is 5 million. A little over 5 million. I think it's like 6 million. So they're trying to get, let's say, 6 million Bitcoin. And then what they'll do is they'll start to stake it. Right now it's not staked, so technically it's still part of the circulating supply. Once they stake that, you're removing millions of Ethereum from circulation. You're taking supply and you're dropping it by millions. And therefore, that should have an impact on price. Not only that, but we have several other companies on this treasury list who are doing the same thing. They're doing it with Solana. They're doing it with Ethereum. They're doing it with WorldCoin. And that could have a profound impact on staked securities or staked cryptocurrencies like Solana, like Ethereum, but not impacting Bitcoin because Bitcoin does not stake. There is no staking there. Thank you, Mickey. I'm going to have to check that one because maybe I was dreaming. You know, sometimes I wake up and I'm like, did that happen? But I seem to have heard that was agreed that the SEC had said so. I'm going to dig into that tonight. But when that happens, Ethereum's going to spike because that means a lot of it is going to be removed from supply and the liquidity pool is going to not dry up, but become much smaller than normal. So let's see. I thought staking was getting interest on your crypto. It is, Garfield. It's earning a yield from the network. So right now, Ethereum pays about 3 to 3.5%. While it's not a big number, what that means for someone like BMNR is they've got millions of ETH. They'll now be earning 3% per year on their Ethereum holdings extra on top of whatever gains or declines happen with the spot price of Ethereum, okay? So it's been a pretty ugly slide here. Once they start to stake that ETH, if they can, then prices will start to rise. So Chio says, how do you stake ETH? I'm sorry, I'm showing you the chart. There's many ways that you can stake your Ethereum. If you want to be a validator, which is meaning you're making it part of the network, and my guess is BMNR will become a validator, you basically follow the system rules. So the network will tell you, here's the computer and all the different resources you have to have. You put in a minimum of 32 ETH, and now you can become a validator. And you run a piece of software that's put out by the network, right? The community for Ethereum agrees upon the software, and you just install that, run it, and you are now a part of the network. That is staking in a nutshell. You can go out to different sites and use their staking tools, but most likely BMNR will run their own staking operations because they have so much of it. So they'll be spreading it around. Would I buy? What? I don't know what that is. S-O, is it, you have is that weird symbol there? Is that S-O-L-T? I don't know what that symbol is there, Michael. What's that between the O and the L? No idea what that is. Buying below moves the price up, and she's above. S-O-L-T? No, I wouldn't buy S-O-L-T. And the reason is I'm not a fan of leveraged positions. All right, when you buy this is a double Solana ETF. Not a fan of leveraged ETFs. I just think that they're a really quick way for you to lose your money. And if you hold them a long time, you'll get more and more decay. Now, if you look at the price chart of Solana, let's get rid of the treasuries here and go back to SOL. Solana is in a similar situation with Ethereum. It's come right back down into a lower demand zone. In this case, Solana, I've got one mapped out between 126 and 135, and it's been bouncing off of that 126 level, and now is rallying out of it. So it looks like now is a good time to buy Solana. If you felt that this lower demand zone that I've drawn out here is going to hold, and you're going to see this thing rally higher, then yeah, go with SOLT, which is a double long. Today it was up 18%. Great. But I'm not a fan of leverage ETFs. I think everyone has to define their own levels of risk. And if you're day trading, I think these are great tools. If you are long-term investor, I think that they're very dangerous. The big problem here was SOLT. Okay, yeah, it's actually got great volume too. Become very popular. Today you had 10 million shares traded, so that's okay. Normally one of my big risk factors would have been the volume on this one. Steven says, is there a non-leverage ETF? I didn't really even know that there was this SOLT. If there's a double, then there's certainly a single long Solana ETF. Yeah, let me go and just go Solana. We'll go to funds. There's SOLT. There's the BSOL is now a staking ETF. And you have SOLZ is the 1-to-1. So there you go. 1-to-1 would be SOLZ is a single long. There you go. News to me, and it's relatively low volume at 1 point. It looks like it's running right around 1 million shares per day. So just don't trade too big a share size. But if you're an active trader, I can't emphasize it enough. This is where you want to be playing. You want to make sure that you're using the ETFs because the costs are very, very cheap from the ETF side of things. So this question all started from Marcus, who asked, "Do I think this Morgan Stanley thing will push these companies down?" I do think it will have an impact on it down the road, more so on the companies themselves. So all of these ones I was just showing you, these treasuries, all of these have potential headwinds because of that. If any of these are going to be listed in MSCI's indexes, then yeah, they're going to be removed. But we'll know when we get closer if this actually does get approved. JP Morgan seems to think it's going to happen, and they're pushing for it, probably because they just don't like Michael Saylor and Bitcoin. Gotta love that. John says SSK. Let's bring up SSK. SSK pays out staking monthly in the form of a dividend distribution. Nice. Yeah, you can see their dividend checks here. 12 cents. Yeah, not bad. 13 cents. And I think you'll see more of that, John, right? Especially like with BMNR. Right now, BMNR is not, it looks like they're paying a quarterly dividend. Next dividend payment is going to happen here on December 8th. But once they start to stake their Ethereum, then you'll probably see more frequent distributions, more frequent payouts there for their Bitcoin. All right. So I think I covered what I needed to cover today. Just making sure I got everything covered. Really going over that rally or dead cat bounce. So let's go back to the comment that was made earlier about data for this week. There's a lot. There's a ton of data. And tomorrow is actually a pretty big day. You can see here you've got your PPI numbers, which is inflationary, and that is expected to show an increase in PPI from a negative 0.1 to a 0.3%. So we're going from a negative to a positive. Not that it's a super high number, but that's going to be a decent fluctuation there for PPI data. You also have retail sales numbers, which are expected to come out low. Let me go past the COVID fiasco and show you recent data. We were seeing retail sales numbers slowly increase. Previous number was 0.7. Great. Now the expectation is we're going to come back at 0.3. I'll bring up the earnings calendar here in just a minute, but those are two of your big numbers for tomorrow. Those are both before market opens, and then we have a slew of home data. You have HPI data. That's going to happen 30 minutes before the markets open, and S&P Case-Shiller Composite 20 Home Price Index. That's also going to happen 30 minutes before markets open. And then once the markets open, pending home sales, Richmond Manufacturing Index, business inventories, federal budget balance, a ton of different stuff going on that front for the U.S. equity market. So big stuff. And then, of course, tomorrow night, if you're trading, when I built the Monday Morning Must-Knows, this was supposed to be, they're going to stay the same at 2.5%. Looks like they're going to drop to 25 basis points for New Zealand. The Kiwi. Let me see if I got a chart of the NZD USD on here. Should have it. Bam, bam. There is your New Zealand dollar. And of course, as they continue to cut rates, that should push this down even further, weakening the value of that New Zealand dollar. Not sure why they're doing that, but there we go. Les says, why would the government release PPI and not CPI? That's the question I pose in Monday Morning Must-Knows. You got to scratch your head. These data points should be created at the same time. Remember, PPI is for producers, CPI is for consumers. Well, why am I going to release PPI and not CPI, right? And maybe, just maybe, it's because later this week, right? Normally you have PPI released one day, and then a day or two later you get the CPI. And they flip them every month. But if you scroll down a little bit here, we should have the core piece. Do we have? I could have sworn I saw the core PCE price index on here. I don't know why I'm not seeing that. I know that we get the core PCE price index number coming out here soon. And maybe it's next week. Let me just check here real quick. I want to make sure when that one comes out. Because the core PCE price index, obviously one of the more important ones, that will be coming out in the next week or two. Where is it? Oh, there it is. Okay, so next Friday, December 5th, we get the core PCE price index coming out. And again, with a lot of other information as well. But that may be why they're holding off on it. I don't know. It seems silly to me that they couldn't release them both less. I don't know why. Lisa, what's your thought on strategy being removed from the S&P and the Nasdaq? It's not a part of the S&P. Let me go here real quick and 1 second. What's my thought on it being removed? I don't really think that much of it because it's almost insignificant. The weightings on it are so small. So let me go in here and just type in Control F. Come on, let me find it. Control F. ST. Strat. So MicroStrategy is NASDAQ 100, but look at the weighting of it, right? It is 0.16%. So almost insignificant. I mean, it's like Baker Hughes and Fastenal and Exelon. I mean, these are companies people are like, who cares, right? So that doesn't mean anything to me. If it gets removed from the NASDAQ, who cares? Now, the S&P, I question whether it's in there. Yeah, it's not a member of the S&P 500. I didn't think it was, but there is no strategy is not a member of the S&P 500. There we go. So it shouldn't have, yes, it should affect the stock price because anybody who is holding an S&P 500 ETF or mutual fund, so let's say you are the Vanguard S&P 500 mutual fund. If you do, you will be forced to sell in your, let me take that back. Rewind, Your Honor. Let's say you're Vanguard and you have a NASDAQ 100 mutual fund or Fidelity NASDAQ 100 mutual fund. If you hold that and they remove strategy from the NASDAQ 100, then yes, Vanguard, Fidelity would be forced to sell their strategy. But remember, it's 0.16%. So while it may have some selling on the marketplace, it's not a lot. It's going to be a very small amount of pressure for strategy. Great question. Steve says strategy should not be a part. They're too volatile and too risky. I agree. I don't think they should be a part of the NASDAQ or the S&P. I mean, Michael Saylor will say that he's a $500 million tech company, but the reality is they're just a Bitcoin holding company. So yeah, in my opinion, they really shouldn't have a place there. But it is what it is. All right, so we went through the economic calendar. Let me check the earnings here real quick just so we can see what we've got cooking. They changed the whole thing on me. You got Agilent reported today, but really not a lot of interesting stuff reporting today. Let's sort it by volume. Yeah, nothing. Oh, Zoom. Is that thing still around? People still use Zoom? Zoom reported earnings and not looking so good. Let me go to Tuesday. Yeah, they changed the whole look and feel of Zacks. It's going to throw me for a loop. Tomorrow you've got Alibaba, BHP Group, Analog Devices, Dell, Autodesk, Workday, and that's pretty much it. HP, Network Appliances. And then there are going to be a bunch of these retailers like Burlington Stores, Dick's Sporting Goods, Best Buy reporting, and many, many others reporting this week. So that, my friends, is your show for today. Hope you enjoyed. Hope you learned something along the way. I will... again, be doing a show Tuesday and Wednesday. We'll take Thursday, Friday off as everybody will hopefully have a great Thanksgiving. Lots of food, lots of friends, lots of family. I will see you guys for tomorrow's show. Again, for those that sent in questions, I appreciate it. Who sent in the questions today? Marcus sent in the one, and there was another couple in there. But Marcus, thank you for that question. If you guys have some, send them on in at TraderMerlin@gmail.com. If you email me there, I will include your questions in tomorrow's show. And hopefully the sooner you send it in, the more likely I can build stuff out for you. So I'll see everybody tomorrow. Take care. Go Niners.